I'm going to talk about today. I'm continuing Forex spot, but this time Forex through futures. Trying to see if I could get better clues off the volume there. I'm reading in parallel, still going through forums, previous posts. This discussion, the more I dig, the more I've seen that people, it's been ongoing discussion, the relation, the volume, the ticks. What are we actually seeing on the spot Forex? And what are we seeing with futures? And right now, I'm going to go through sort of my tests, going through the futures for the main currencies. And right now, today, I'm going to tag the Swiss, guys. Here's the monthly candle chart. This is Swiss franc futures expressed in US dollars. Oh, zoom, 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 zoom. Is this my monthly defined breakdown line? Let's just look in the back. Whoa! Here's my monthly defined. There you go. Here's my monthly defined resistance, support, patterns within patterns, and right now, right about here, and right about here. Give that here. Just trying to check here. There was a breakout back in the days, right above this one. Remember, the more probable possible targets are the ones that are closest to the breakout line. Multiple tests of this breakout line, multiple tests of this breakdown line, and how does that? Whoa! Laser accuracy. And that's why it's important not to get greedy. When you start drawing lines, I used to do it all the time, and just going off the bigger patterns. When in doubt, stick to closest. These are monthly candles. Top to bottom. Add it to the breakout line. And always itch in your favor. So if you get to a round number, if you see that you're going to go over some important resistance, just lower your target. 1.09. Just increase your odds. You would have lowered it just a little bit. One to maybe 108.99, 108.95. And open high 109.08, guys. You would have reached target, would have get triggered out. So just make sure you're on that side. So this pattern, 1, 2, 3, 4, 5, 6 months breakout. But could you have played it? Probably not, because you would have had to enter at the close of this monthly candle up here, entry there, and the risk reward is just not worth in your favor. But it's good to know. You know that target might be reached. You're going to be building, morphing to bigger charts, bigger patterns. You don't play everything. You want the A++ setups. Ideally, this monthly candle close would have, instead of closing all the way up here, would have closed here. You would have entered about here, sell stop here, and then the risk reward would have been more honest. Is your risk reward maybe 1 to 1, 1 to 1.2? Higher probabilities of reaching that target the closer it is. You could have done it that way. What am I seeing here though right now? Swiss franc. I need an arrow. So is this a target? Whoa. All the way down here. all the way to these previous lows right here. Previous support. Well, previous resistance went out, and now that's become support all the way down here. But a few things wrong with this. Would have to go through this resistance right here at the 198, and then you'd have to go through the 0.97. So I have a feeling that this will actually probably hit some turbulence around here and maybe here. But what could be interesting is we could have some consolidation here, maybe a bigger pattern eventually. And then we take maybe a pattern here like that, and that'd be the measured move. Look at the arrow all the way down here to make it more viable, make it more probable. I don't like this single retests of breakout lines and going right through. I like it when there's multiple tests. If it just rips through, yeah, in a parabolic way, I don't like them. I rather when there's like a launching pattern. But definite, you could look at the 12-month moving average still angling downwards. We're going to play the Stan Weinstein on the weekly. All we have to know for Stan Weinstein that there's some hidden support here. Hidden support a little higher. Move that. Right here. This level here, this level here. So if ever there's pullbacks, let's say we get in on the weekly. Let's say there's a stage 4 confirmed breakdown. Then we could expect pullbacks around these areas here. When it starts hitting here, maybe pulling back close to the 30-week moving average or the 12-month moving average going downwards, etc. Okay, let's head on. Let's head down. Forex. Stan Weinstein. Make that bigger. Oh, so much noise. Wow, looks like a scribble. Preschool. Drawing tools. Remove all drawing tools. Going once, twice, sold. There you go. Mansfield relative strength compared to the basket, the dollar index, underperforming it. That's good if you want to short. 30 moving average starting to go downwards. You're below the Ichimoku cloud. It's a lot of erratic stuff, guys. Not pretty. Not stage 2 pretty, guys. Here it was nice, stage 2 compliant. Above 30 moving average. Nice ride, right? Very pretty. You had your entry here. Let's go look. Let's go look how... Because I'm still learning, guys, about the... how currencies fit in the Stan Weinstein's observations of the stage analysis. Oh, there's some type of volume here. Let's go look. Zoom, zoom, zoom. Zoom, zoom, zoom. Okay, here it is. Here's most of the stage 2 right here. Remember the green? That means 30-week moving average angling upwards. The price is above the 30-week moving average, and you're overperforming the US dollar index. Arrow. Starts green here. That means we have most of the confirmation. Now we need volume. Horizontal breakout line. The candle that has for me the volume is this one here. Where's our horizontal breakout line? Maybe around here. Above the Ichimoku cloud. This is actually the breakout candle for us. There was a small pattern here. This is also nice right here. Out of the Ichimoku cloud, above multiple tests of that level here. You have some other levels that could interfere, but right now it seems to want breaking out. But you're not. This candle here is the first one that you had the other confirmations, right? That the Mansfield was going upwards. But the volume here, you have slightly more volume. It's never twice. Honestly, in Forex right now, even futures, I haven't seen the twice the average of the previous 4 weeks that Stan says for stocks. And now we had nice stage 2 run. So I'm going to have to figure out how much more is that? Are these spikes enough or it's more a crescendo volume that you want to see on the way up. And that's all she wrote, guys. After that, perfect stage 2. You would have moved your sell stops along the way. Pull back. Mansfield starts going up. Sell stop here. The trader's way. Investors. Sell stop here. Here. Move up. Here. Here. Move up. Pull back. Sell stop. Move on the way up. See, that's pretty. The lows are always higher. The lows don't go of the lows. Those pullbacks, they don't go below the previous low. That's why it's natural. I got triggered out. Well, if the stock is having lows, pullbacks lower than the previous lows, it's a sign that you don't want to be there. So I'll stop here. So I'll stop here. And where's the last one? What could have happened here? Did we have a valid trend line? One, two, not this way. Stan wants 3 dots. That's his valid trend line. And on the 4th, break half your position off. 1, 2, 3. And you would have taken... If you wouldn't have been able to react here, and taken that week would really drop fast. You would have exited here. Worst case, you would have exited with your sell stop right up here. Pretty cool, right? So you would have rode from here all the way here. Tuck. That is your reward. Not bad, right? So it's playable. There's situations where this is a nice stage 2. But right now, the Swiss franc has been acting erratically. A lot of signals, false signals here. So that's why it's important to have that volume confirmation to help us avoid these whipsaws. And what are we dealing with today, guys? See, small stage 2 here. See, you have the volume right here in this candle. It closed above the Ichimoku cloud. It closed above the 30-week average, going upwards, overperforming the US dollar index. Look, stage 2, guys. Went up. Didn't ride super high, though. Did not ride. Kind of fizzled out right here and then back down. That's why you need some guidance from the monthly candle chart. See, all of these plays that we saw in the Stan Weinstein on the stage analysis on the weekly, you should have been avoiding them because you did not have a breakout, confirmed breakout. You see here, let's go back. We had a nice base right here on the monthly. And that candle coincides with a monthly candle break right there. If I extend that line, you even had a nice measured move. See, that's another thing I've noticed. Frameworks overlap. Buy signals are given by different frameworks pretty much sometimes at the same time. They work in harmony. Never judge somebody who's different framework. Just you could judge him a little bit, I guess, if he doesn't have money management protocols. But other than that, closer target reached. And where's my greedy target? Whoa. Oh, there. Take that one. Patrick, you still don't understand your software. And that's a more greedy target. They were both reached of this nice base. Classic chart trading. Implied measure move out to breakout line. With a monthly candle close above that breakout line, gives targets. Stan Weinstein gives you entries, and the target is by moving up your sell stop. And eventually you might grab a little bit more of the move with Stan Weinstein. You see the delta? Less greedy would have exited here. Greedy target exit here. But Stan would have exited all the way up here. So you get a little bit more juice for your money. So if we come back all the way, if we come back here, we would have not played those weekly breakouts because we have that rule that we want a monthly candle close. We want to get out of that noise, right? Monthly defined support, resistance, and all these small stage 2s within that would have avoided all of them, because even if you get the singles to get in, doing it the Stan way, we still know that you don't have a monthly candle chart breakdown to confirm your entry, guys. But right now we might. Let me go back. I drew lines, then I erased them, and then I'm drawing them again. So this is the bigger pattern. Right now, this is a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 month. At this level, if we have a breakdown below that, and then we have those two other levels that I identified as potential congestion along the way. And here we are. So before we play that, definite stage 4. But for it to be ideal, we need a close below that monthly defined breakdown line. So a few weeks to go. Put in your alerts. There's even some weekly defined support here. So if you could close below those two levels here, 1.0025 and the monthly defined, the 1.0051. If we get a super duper close below those two, it'd be great. Look, crescendo volume is already starting, guys. It's already increasing. So let's see how that increases for the next following weeks. And hopefully the Mansfield starts digging deeper and deeper away, underperforming the US dollar index. Oof. All right. That's pretty much how I see it. How you get harmony. Go check the monthly to save your butt. If you're in doubt, go see the monthly. If the monthly's telling you a different story than on the weekly, believe that story above the weekly story. All right, guys. See ya. Ciao.